What is going on, my good old friends of YouTube? It is your boy Stas here. Welcome back to another video. So we got to break down 7 stocks in this video, 5 of which reported earnings today, and 2 of those just reported earnings, 2 of the 5 here after the bell. And those are 2 pretty big companies, so we got a lot to break down in this video. We're also going to go over the markets, what I'm doing in these markets, so sit back, relax. Cheers, guys. I got some Snapple here for this video. And let's just dive into it. If you all find value, hit that like button. Feel free to subscribe as well and get your free stocks all down below in the description box. So listen, guys, today it was not a good day at all for the stock market. You probably know that already at this point. The Russell closed down 2.3%, and I believe we had a bit of a run into the close, a little rally. Nothing much, but we did see one here, and we'll talk about that in a second. But overall, it was a red day. Again, Russell down 2.3%, NASDAQ down 2.9%, the S&P down about 2.1%, as the Dow went down 1.5% on the day. And it looks like the VIX closed up 5.5%, and gold and silver, each of those went down a little bit. Gold down 0.1%, silver down about 0.5%. And like I said, we had a little bit of a rally heading into close here. You guys can see SPY was very beaten down. I mean, Triple Q, all these indexes were beaten down. A lot of the selling came in the morning. You guys can see here on the intraday. Then we had a bit of a rally heading into the middle of the day. Then we saw even more selling around noon here on the East Coast up until roughly 3 p.m., start of power hour, and we pretty much rallied all of power hour. You guys can see SPY went from about 359.80, and it closed at just a little bit under 363, so it ran up about 0.9%. Triple Q in that same time period went up from about 269 roughly. It closed at 272. It ran up a little bit over 1%. And you guys remember earlier in the day, Triple Q was down what? 3.5%, almost 4%. It was a freaking disaster at its worst, as big tech did not do well at all today. I think Apple at its worst was down a little over 6%. So, yeah, we rallied into the close, which is nothing unusual in these markets, especially as stocks get very beaten down throughout the course of a day, which today was one of those days. It's not unusual to see a little bit of a run at some point throughout the day, and especially, heading into the close. And that's what we got today as the VIX went up 5.5%. We saw, obviously, an influx of volatility today. That's a little tongue twister right there. And if you guys pull up the 4-hour, you're noticing Triple Q took the lows out today from yesterday. I think I mentioned that in my last video, but SPY did not do that. So for tomorrow being Friday, we got to see direction here. Are we going to get a push through for the bears? Are they going to take that low out from yesterday pre-market, 358.72? If so, that's not going to be a great way to head into the weekend, obviously, for the bulls. At that point, SPY's probably going to be going down. I mentioned this in my earlier video, but I'll say it again, probably down to that pre-COVID high. If you guys remember, SPY right before the COVID crash was right around 335, 340, maybe a little bit higher than that, right in that range. That's where we're probably going to be going on SPY if we really start plunging under $360 to about $358. And Triple Q pre-COVID high, all-time high at that point in time, was right around 238. 240-ish roughly. And if we do clear under 265, 260, that's probably where we're going. So what do you guys think? Let me know your thoughts down below in the comments. I'd love to know, as always, your thoughts. And if you want me to cover any specific stocks, ticker symbols that you guys are looking at, drop them down below in the comments. Now's your time to do that, your chance to do that, and I'll cover them in an upcoming video. So we had some earnings today. We had Micron, Nike. Those came out right after the bell here today. We had Bed Bath & Beyond, RAD, which is, what is that? Rite Aid. I almost forgot for a second. And we had CarMax this morning. So let's start talking. Let's start breaking down some stocks, guys. So Micron reported after the bell, just no joke, 15, 20 minutes prior to me filming this video. And the stock closed down on the day 2%, right? Right at $50 a share. And here after the bell, it is down from 50 a share to now $49.70, so it's down about 30 cents. But at one point, it was down $3. It initially tanked 5.5% when these earnings came out, and now it's obviously rebounded from that point. And again, it's only down 30 cents here after the bell. So let's break down what ended up happening. They reported adjusted EPS of $1.45 versus $1.30 estimated, so they beat that. And they ended up missing ever so slightly on revenue, $6.64 billion versus $6.68 billion estimated. So beat on adjusted EPS, missed on revenue, and they see the next quarter, I think Q1 sales for 2023, they see revenue at about $4.25 billion, which is a lot under the estimate of $5.62. So I think it's got to be the reason why the stock initially dropped. I mean, originally the estimates were $5.62 billion for the next quarter. They're only looking to do $4.25. That is a huge chunk under the estimate, huge chunk less than the estimate. And look, it might actually go green now after the bell. Micron is now pushing $50 and it only closed at $50 and a penny, guys. So we might break that. We'll see how it goes. And are we getting any other info here as to why or earnings or not earnings guidance, which is why the stock's moving up now? I'm not really seeing anything, but overall, again, they ended up, beating on adjusted EPS, but they missed on revenue. And the chart here, let's talk a little bit about that on the 4-hour time frame. It just hit a fresh low, guys. It just hit a fresh low here after the bell at $47. And clearly the Bears are in charge, and they have been in charge the entire year. The entire freaking year, guys. $98 is where we started this year. Now we're at $47. It's cut in half. The stock is cut in half. And I think before that, was it higher? Actually, no. That's the all-time high, $98. We hit that in the beginning of this year. And look at this chart, guys. This is what? The 3-year chart. We have a clear double top on Micron. Look at that. This is textbook, guys. Double top right at $9,800 roughly. And here we are, $50. And to be honest, this could be, I'm not saying it's a screaming buy right now, but at some point, we're going to need some sort of relief rally on Micron. I'll be the first to tell you that, because we just now took, in the past couple of weeks, we took the lows out from June. The lows from June were right around $52, $51. We just broke under there. Now we're under 50 roughly, here after the bell. So if we go down to 45, 47 again, I don't know. We're going to be in need of a relief rally, in my opinion, on Micron. And pulling up the max chart, you guys can see this pullback was very healthy. And in fact, this max chart looks pretty damn good on Micron, if you ask me. And this is another reason why I'm looking at it in the lower mid-40s as a potential, swing trade, maybe a longer-term swing trade. Or, we'll see. Technicals look decent here, again, on the max chart. So let's talk about Nike, ticker symbol NKE. Let's pull that up. They reported earnings today after the bell. They went down 3.4% on the day, closed at $95. And now after the bell, guys, they're at $90. So they're down about $5, or in other words, about 5%. Funny how it works out that way. On EPS of 93 cents versus 92 estimated, so they beat that very slightly there. And revenue beat as well, $12.7 billion versus $12.27 billion estimated. So double beat for Nike, but some of the metrics here aren't looking that great. Greater China revenue is down 16%. EMEA revenue is only up 1%. Let's see if they've put the other ones here. It looks like sales increase in fiscal 21, earnings decline, yada, yada, yada. Gross margins 44.3%. I'm sure that's been hit. Looks like inventory, not inventory. Where's inventory here? Quarter-ended inventories were $9.7 billion, up 44%, driven by elevated in-transit inventories from ongoing supply chain volatility. That makes sense. North America revenue's up 13%. So I feel like China is hurting. I mean, the fact that it fell year over year, obviously China in general has been struggling a lot, but Nike in China is hurting, and that's probably a big reason why the stock is falling. Maybe a lot of that was expected, probably was, but I don't know. Maybe it wasn't fully priced in. It seems like it wasn't, because now Nike is falling to a fresh low, $90 here, and it was at $150 to start the year off. And I think all-time highs were over 200, if I'm not mistaken. No, not over 200, but right around 200, $180 to be exact. So now Nike's down pretty much 50% officially from all-time highs from 180 to about 90 bucks. It's down about 50%. And on the max chart, kind of like Micron, does this not look like a stock that needed a big pullback like this? I mean, we ran up to 179 bucks pretty much straight in a straight line from 2016. The stock was at 50 bucks in 2016, and it really saw only a couple of minor pullbacks between 53 bucks to 180. So in my opinion, a lot of stocks needed this big sell-off that they're seeing, especially Nike, especially Micron. And there's a lot of other ones that we can go all day about that needed the pullbacks that they're seeing. And a lot of these are far more than pullbacks. These are crashes, guys. These are just crashes. I don't know what else to say. So yeah, this needed this, in other words, right? And now we're approaching a point where technically it would make sense if buyers started coming in on Nike at about 80, maybe 85, maybe a little bit less, a little bit more, based on what I'm seeing here on the max chart, right? And as always, I'd love to know your thoughts down below in the comments. And full disclosure, I do not own Nike and I do not own Micron. Those are two stocks that I don't own, but I wanted to cover them and give you guys some thoughts as always, because that's what YouTube is for anyway, right? I mean, come on. So let me know your thoughts down below in the comments. And if you haven't gotten your 15 stocks from Moomoo yet, use my link down below, deposit at least $100, and you get 15 stocks, each up to 2,000 bucks. And you could also get 12 stocks from Webull with any amount deposited. All of those free stocks, free money, guys. Link down below. All of those are linked down below, and all those links do help out the channel, guys. I appreciate you all. As always, cheers. And with that being said, let's continue. So we had Bed Bath & Beyond this morning. Triple BY is the ticker, and they reported not the best numbers. And the stock went down 4%, over 4% on the day. So you guys know Beyond, not Beyond. I always confuse these freaking ticker symbols, guys. Oh my God. Bed Bath & Beyond. You know this company. It went from $4 to 30 bucks on a huge pump recently. Now it's pretty much back down to where it was before the pump. It lost all those gains, and it's one that it could pop off any day. It's one of those stocks. We've covered it before on the channel, and the numbers they reported were horrible. They did EPS of negative $3.22 versus negative $1.85 estimated, so they missed wildly on EPS. And they ended up barely, funny thing is they barely missed on revenue. That came in at $1.44 billion versus $1.45 billion. And where they really got destroyed is their same store sales, which are down 26% year over year, which was right in line with the estimate. So it's not like this is a surprise. That was estimated. And this makes sense because, like I mentioned in my recent video, I forget what day this was, but it was recent. I mentioned to you guys that I went to Bed Bath & Beyond, and there was nobody there. I went to the store, and it was a ghost town. There was no cashiers. There was literally nobody in the front. I walked around, and then it was in the back of the store when I was already there for a couple of minutes just looking around. Back of the store, I found an employee. So these retail businesses are definitely struggling right now, no doubt. Bed Bath & Beyond, for sure, is one of them. And I know it's obviously just me in one location. I mean, it's not the best piece of data to look at to really value a company, but I'm sure this is all over the country, Bed Bath & Beyond. They're pretty dang empty, guys. Let's be honest. Obviously, they're making sales, but they're going down year over year, same store sales, and who knows? This could go out of business. In 5-10 years, this company might not even exist anymore. It could be Kmart. It could be like Toys R Us. It could be like any of these that have just gone bankrupt, and they're just forgotten in history. I mean, that's just what this could end up being. And the truth is, Rite Aid could be the same. Rite Aid went down 30% today, and this stock is not. It's known to do this. It's known to do this. I think it's fallen this much many times in the past couple of years that I've been tracking it, and I've never owned Rite Aid, but I've watched the stock. You know, we've covered it many times here on the channel during earnings season, and they just cannot catch a break, guys. They're down 30%, like I said, on the day, and their earnings were not that bad, but I'd say it's now that they expect a bigger loss than expected for full year 23, that's probably why the stock is tanking. They expect a loss of over $520 million, and they reported negative 63 cents versus negative 55 cents on earnings. That missed, and they ended up barely beating on revenue, 5.9 versus 5.77. So, all right, they beat on revenue, but they lost. They lost a lot of money. Losses are widening for the next year. There's probably more that I'm missing here. There's probably a lot more bad news. But overall, it's a company that is now pretty much in penny stock status. It was at one point a couple years ago, $30 stock, maybe more than that. Yeah, $30. Now it's at $5. If it starts going to $4, $3, guys, it's a penny stock. It's heading to bankruptcy. I mean, that's just the reality of Rite Aid right now. Same thing with BBBY. It's I'd probably say, and actually I really can't say. I don't want to just say this and just to say it. But out of these two, I have to do more research. I don't know which one is better, but they're both pretty risky, I'd say. And if I had to pick a stock, one of these to just throw $1,000 at, hypothetically, I'd pick Bed Bath & Beyond personally, because you all know with Wall Street bets, anything could happen. And who knows, maybe it goes from $5 to $15 or $20 again, although that's very unlikely and nobody could really time that. It's all luck. It could still happen. So Rite Aid is not looking good. CarMax is also not looking good. You guys get the trend here. A lot of these earnings, they're not good. CarMax went down 25% on the day. You cannot make this up. They did 79 cents earnings per share, which was down from $1.72 a year ago. So their earnings are down wildly year over year. And they also missed on revenue, $8.1 billion versus $8.57 billion. And same store used vehicle sales are down 8.3%, which is really the reason why the stock is getting destroyed, which that is versus the down 3.6% estimate. So what's going on? Demand for used cars are down. Obviously, demand is down 100%. Well, not 100%, like there's no demand now, but it's down a lot, right? And we've seen this in the CPI, data. We've seen inflation in used cars and vehicles. You guys know that category. We've seen that come down, right? It's not where it was. I forget where it peaked, what month it peaked, but at some point, or at one point, not too long ago, there was a car bubble, right? Let's just be honest. The car market was in a bubble, probably still is. I'm not a car enthusiast. I don't know exactly, but from what I've seen, from what I've heard, and just looking at regular just car prices online, not Lamborghinis or Ferraris or anything like that, but just looking at regular cars, Toyotas, Hondas, BMWs, whatever. A lot of these have come down, the used ones. And maybe not for all of them, but a lot of them have, from what I've been seeing. And it looks like CarMax is feeling it. Demand's down. Rates are going up. People are feeling like they don't have as much money. Stock market's down. The wealth effect, right? People are feeling more poor at this point. They're not going to go out and buy even a used car. They're going to hold on to their car a little bit more. And if you're ultra rich, obviously you don't care. You can eat the inflation. Doesn't bother you at all. You can do whatever you want. But if you're a middle class person, yeah, you're going to be making some different spending decisions here moving forward. CarMax is feeling that. So this is at a fresh low. I personally wouldn't touch it. It's a falling knife, but I figured let me cover it. So those are 5 stocks that reported today: CarMax, Rite Aid, Bed Bath & Beyond, Nike, and Micron. Now let's talk about 2 other ones that didn't report, but I'm watching. Palantir, funny enough, went up on the day today, 2% green day for Palantir, and this looks like, as of now, it is holding this channel, does it not? It looks like it's holding, and it's actually, it closed above the 50. Now it's trying to break out of the 180 SMA here on the 4-hour chart. My alert's at 850, and look at where we closed today, guys, right around $8.10. So I think Palantir, if it takes out 850, although the markets are in turmoil right now, it's a pretty risky stock. I'll be the first to tell you that. I think it'd be a decent trade from there, even in this crazy market. If the technicals look decent, why not? Which right now they look decent. And I'd say, again, if it breaks 850, we might have some ways to go. $9, that was the low point from the beginning of August. We might fill the gap from there to about $10. $10 was the high from the middle of August. So there could be some upside here, and it could move fast. Foot Locker's another one, the last one that we're going to be covering in this video, guys. And if you stuck till the end, let me know in the comments. Say, stuck till the end. I appreciate you guys as always. Foot Locker's one that we called out a couple of weeks ago, probably over a month ago at this point, when it broke out. Excuse me. Oh, man, my throat. Obviously, I need some water, guys, and we're not editing this video. But yeah, where was I? We called this out a couple of weeks ago, and it broke above, I think, 34 bucks. Filled the gap up to about 40. And it makes sense that it didn't rip from 40 to about 45, I guess, considering it went up so much before that. So now we've gotten a flush, I guess you can say. A lot of selling came in. We went from 40, now we're back to the low 30s, and we are falling knife right now. We are trading under the moving averages, which is not the best, but if this were to recover, maybe back over the mid-30s, I'd put my alert at 35. If it starts breaking out of there, guys, hey, we might be right back in that zone or in that gap that I'd like to play it in between 35 and 40 bucks. So with that being said, I'm going to wrap the video up. If you enjoyed it, hit that like button for me. Feel free to subscribe. It really helps me out in the algorithm. And check out my Patreon link down below. If you guys want all my buys, sells, call outs, morning videos, all that good stuff is on Patreon. And you could also get your 15 stocks from Moomoo and your 12 stocks from Webull, which is free money, literally free money. All that is linked right down below. I'll catch you guys in the next video. Peace out.